Hello everyone, Jason Medeiros here with EminiStrategies. I just wanted to go over one of our educational presentations today. For the month of December, we usually send out chapters every month. We'd like to share this one with you, going over a technique that we have with the hybrid strategy on focusing on two specific charts, being the 2 range and 6. Our presentation today will go over the main focus of qualifying an entry, as well as looking at the 2 and 6 range scope with two different types of methods of taking a intraday signal and turning that into an intraday swing possibility. The objectives of this is to take a look at the 2 and 6 range combo, understand them for what they are, the mechanics, as well as the indicators or the strategies that are attached to them, understanding the dynamics of the entry, advance into a simple swing signal, as well as apply the risk management while in the signal. Our two charts of interest today will be the 2 range advantages and the 6 range advantages. In front of us, we'll be using the 2 range, the short-term price reversals, the price entry precision, development into a swing signal, and the smaller stop loss. The 2 range will turn and counter turn the market a lot faster than the 6 range, and you will be able to get that better entries to minimize that stop loss. Again, we apply the stop loss, the high of the entry candle, the high of that entry candle plus 3 ticks. Now the 6 range has a great advantage. Each bar, of course, has an extra 4 ticks built into it. So if you're looking back the same 100 candles as the 2 range, you're going to have an extra 4 ticks built into that so the algorithm can see it. As well as the directional indicator being the momentum and reversion hybrid indicator, the identification of key reversals. Also, we're going to look to qualify that development of a swing signal. In front of you, you have a simple 2 range and a 6 range chart. And what we're going to look for is to see the bigger movements. Of course, we're going to develop a bias. And what we want to do is develop a bias, whether it tells us we're only short or long. And we're going to use the 2 range to effectively take those entries on the pullbacks or the runs, depending on what the opportunity brings to us. Couple things I definitely want to go over. We have how to identify qualified signals. Okay, the first is going to be identify the deflation zone on the 2 range. You're going to be looking for short-term opportunities. So the short-term opportunities, you can see the momentum and the hybrid indicator right there. What we're looking for is those yellow vertical lines where the volume decreases and crosses over. That's going to be the deflation zone. And if you're going to take any signal, before the signal is qualified, you must double confirm to see if it's in the same direction of the 6 range momentum indicator. Okay, and that's down below the 6 range bias ID. You're buying if the histograms are crossing over going to the blue side, and you're selling if you're looking at the histogram pushing to the downside. Okay, and that's the same type of signals that you'll be looking for on the 2 range indicator itself as well. We want to disqualify any signals that don't need to be taken by Xing them out. Simple, just put an X with a line, anything that you have there, just make sure somehow you can convert that out so you don't get sidetracked on looking to take that counter turn or that quick short-term opportunity to scalp. Okay, what we do want to use those alternate signals for is to identify the pullbacks in real time so you can get into a price that's needed to minimize your stop. All right, going into it, we're going to base this on a 3 target methodology, how to qualify a signal into a runner. So right now we'll focus on the first target, again a 3 target methodology. The price moves 1 point or 4 ticks in your favor from the entry price, and the trending candles identify a stall in price, meaning the candles that you're going to see, you'll have consistent green up candles and an upward price action movement, and then when you get the stall, you'll get those red candles bringing the market back down. That's going to be considered a stall. Okay, and we'll look for that, and that's where you're going to be looking to take that direction of your entry once it pronounces the opposite direction and finds that support, in which I will show you through the outline. What we have in front of us right now, we're going to be working on the bias long. You can see on the right hand down below here we have a buy signal, long bias at 534.07. Okay, right on this candle it had gone flat, and next thing you know we have the market moving to the upside. Well, we want to look at that in a shorter time frame. saying I only want to take a small profit, or I'm looking for short-term opportunities only. Fair enough. We have the long bias at 534.07, which is identified by these two sell signals. Two buy signals here. The green arrows are showing where the bias became long and then where your first entry would become. And you can see here your stop is 1786, 3 ticks added to the low of the lowest candlestick that I was talking about here. You add 3 ticks to that low, and that will be your stop on the entry here of 1788. As the first histogram did push up, it finally deflated. And this is that deflate that lets you know, or that stall in price that lets you know exactly what you're looking for to take off the first target. And that's a 1791.25 rally. Okay. We'll go to the second now. We're going to look for the second target. I put it in simple terms: sit on your hands. Take the hand off the mouse. As the first target has been established, the second target is near. But expect a pullback. Determining the depth of the pullback is key. Always look for support levels for price to decrease to, and find that injection of volatility that identifies that price. This will be followed by a candle that engulfs the pullback with a single thrust of price movement, and I will identify that into the next chart. Once the momentum indicator establishes another directional inject, then you have another leg up in price. Continue to allow the second and third target room to run. And that's what we have in front of us now. The second target here, you can see the entry was 1789.50. Okay, the long bias became long at 536.24 Pacific Standard Time, and the long finished at 550.07. And what you see on the right side is our first entry was here, and we took the stall price, and that would be the deflate. Now we have another long bias here, and you can see that's the same engulfing candle that takes out all of this pullback. And that would be where you continue to hold your second and third contract. Now, as the market continued to head to the upside, what we're looking for is that price pullback. You can see a few candles here on the low, giving you the lows, and then you have, before the engulfing candle that moves up, you have these areas here showing a little bit of resistance. Plus, I went back a little bit in time and found some areas that would help us. Again, what you're looking for is you want to find that price support. And it did identify it to us. As we became long bias again, we took that market all the way to the upside. As the long bias exhausted, you can see exactly where it exhausted from the red histogram that pushed down in the indicator. This is where you would want to say, I have my second target on the table, I'm going to leave it. Okay, as this is occurring to the left on the 2 range, let's say you didn't get in right on the first engulfing candle or push up. Fair enough, right? What you're looking for, you have multiple opportunities. You have another blue histogram here, another blue histogram, another one, and another one. Again, 1789.50 now, and now we're looking at 1793. Okay, because that's the second exhaustion phase. And it comes to the conclusion of your third contract because of our 3 target methodology. Okay, what we're looking to do is we're looking to take the exhaustion out of the third contract with as much profit as possible. 2 different ways you can look at this. One, you can have a set target for it, 6 points, for an example, or you can wait for that full exhaustion to happen. And let me go through the steps now. When allowing the final target to mature, allow for a 2 pullback phase to pass, meaning the 2 pullbacks that we had just seen. Once the third pullback is pronounced within price, adjust your stop accordingly and exit the signal. Also, our high frequency trade levels in our members room pronounce the extremes of price in both directions. Follow the resistance and support levels to establish a final target for the third target runner. And this is what we have here. Now, I'll zoom in just a little bit so we can take a look. Okay, what we have is a long bias at 8 a.m. Pacific Standard Time, and it finishes at 11:20. Okay, and you can see that from the green arrow down here below. Now, I'm going to go over the 6 range opportunity first on how we should have played out this entire movement. You at long biased here. Here's your first, and then the engulfing. Here's your second opportunity. And then we have new price support. So we can see the exhaustion happen here. So if you took your first contract off the table, your second contract off the table, and now you're only holding a runner as you drag your stop up. Okay, shouldn't bring your stop your stop should be no more than around the 1796 level. Okay, so I did go back in time again, and we have new price support. Market did deflate. You can see that from down here below, and you're continuing to hold long. If you're going to hold that runner no matter what, you're still going to walk off the table with something, but give them an area to find support to make that final decision that you want to walk away. Market did give us another long bias, which was right here at 8 o'clock. Engulfing candle did happen. It took out 1, 2, 3, 4, 5, 6 candles in one shot to the upside. Hold that third contract and push, and you can see now the market did move to the upside. And as we get those red candles, you can see the deflate and the momentum indicator that lets us know that the volume or the momentum of that push is complete. So you would want to take that off the table as quickly as you could. Okay. Now looking to the left, there's 10 opportunities. 1, 2, 3, 4, 5, 6, 7, 8, 9, and then you did have one more, which was up here, the 10, and you can see down here the same situations that gave you those opportunities to enter into the market. Okay, now the long bias, okay, became at 1798 level. Your stop would be 1796, and your exit was at 1804. And this is how you would hold your third contract rally. As the market was going up, you had multiple areas. Not saying it's going to fall or drop right away once you enter, but you can look at the valuable areas to be able to take those signals to increase your probability so you can have an effective run. Again, now just going over the 2 and 6 range combo, it generates enough signals to qualify a minimum of 3 signals a day for entry. So if you're looking just to say, I want to take a couple trades only, there's the opportunity. Okay, entry bar of the signal should always follow with a 3-tick add-on from the previous low or high of the entry for a qualified stop. Meaning whatever bar you enter on, go back a couple bars, find the high or the low. Depending if you're buying, you're looking for the low. If you're selling, you're looking for the high. Add 3 ticks to that, and it should give you sufficient room to be able to qualify that stop. Okay, and again, I know a lot of us go through the same rules, but accept that stop, okay? Because more opportunities will emerge, and losing focus on one trade or one signal will result in other signals that are winners passing you by. And what I've done here, down below, let me zoom out a little bit, take a look. You can see the long biased and short biases here. What I did was I identified the buy signals at the bottom and the sell signals only. If you're looking for the histogram movements, you're trying to stay with the trend of the market, this is how you would do that. And what I've done is I've gone forward and I've taken all the long biases, same time frames of long and short bias, and I've applied all your entries based on the 2 range opportunities on how you can effectively use it in the market. Here's another one where short and long became quickly turned. You had a short for a while, you went long for a few trades, and then or a few signals, and then you had short again for a few more signals. And again, you can see how your bias will change here as well. Depending, if you want to stay with the 3 range, it will give you less opportunities in a day. But again, we're going back to that factor where more data will be calculated into the candle. So you'll actually have stronger signals or histogram movements when that happens, and you can still focus on the 6 range as your directional chart to be able to say long or short bias. And to go over a couple of questions. Does this software automatically place orders? The reversion and momentum strategies will print entry and exit prices directly on the chart automatically, but they are not intended to be auto-traded. If you do, we recommend that you monitor them. A simple news or Twitter feed that comes out about anything fundamental, government, it can really manipulate the market and get you hurt. So we want to protect you just as much as we want to protect the capital at that time within the market. And the strategy, the hybrid strategy, will not print entry and exit prices. What type of training will I receive? Well, our programs will be accompanied with a 3-month membership in our educational rooms. These rooms go over exactly the hybrid, the reversion, momentum. We have high frequency trade levels. We have multiple videos that bring you up to speed. And then again, we have an open phone policy and an open meeting calendar policy for clients. One-on-one presentations, one-on-one time to go over any bad habits or any concerns that you have about what you're doing wrong. We're here to help you, and that's a lifetime support. Do I receive the software or do I access this through the room? Well, once you become a member, you will receive the strategies as well as access to our video library that covers in detail the strategy mechanics and opportunities. So you will receive and own the strategy software for life. It's a one-time fee only. Okay. Is this for a larger account size or 2K account? The techniques of the 2 and 6 combo is for all account sizes. The main focus is to apply this method to a daily market in a systematic way, meaning apply a daily stop, dedicate a certain time to trading only, and minimize the amount of trades you do in any day of trading. Will I be able to work with you on a one-on-one basis? Absolutely. We provide lifetime support and continuous one-on-one mentorship. We provide several monthly classes to cover all the opportunities and questions that apply to the present market for our clients, meaning every month I try to do at least two huge classes. Every week I try to do at least an hour to 2 hour classes to go over everything. If the market's stale and it's not moving, then there's not much to talk about. But if the market has some good volatility, there's a lot to talk about, and I will have a class every Friday, usually after the market closes, to go over any of those concepts or bullet points that we need to touch on with the strategy itself. And again, the main question, what qualifies EminiStrategies as a mentor? Well, George, our founder, he's got 30 plus years in the market. He's a former floor broker as well as a CTA money manager. He's been at the institutional level firsthand. Okay. Myself, I've assisted in block accounts valuing 3.7 million plus. I've worked with many systematic systems that only work with entry and exits only, and as well as I've worked with many clients when I was at the firm, just like yourself and myself, about just retail trading and how we can beat the street and be a career trader on a consistent basis day to day. Okay, I just want to take this time. Thank you for showing your interest with EminiStrategies. Again, I do hold an open calendar for all questions and concerns. Please feel free to schedule an appointment or call the direct line below. We wish you and your families great holidays. And with the presentation aside, trading is the methodology that we try to do on a consistent basis. The more training you take, the better things will be for you. Okay, so remember to concentrate on one methodology at a time and focus on one market at a time as well. I look forward to speaking with you and have some great holidays from EminiStrategies.